You are listening to chartingwealth.com for Thursday, the 10th of May, 2018. Hey, the books are coming in from the printer tomorrow. So if you want a copy right off the press of Charting Your Way to Wealth, it is our book that explains the method. It's multiple chapters on everything from the derivative oscillator, price percent oscillator, Heikin-Ashi candlesticks, our two methods of trading, everything you need to know to get started. It is coming in on Thursday. So go ahead, go to the website, look under the daily market review, and you will see links to where you can go and buy your copy. We will be getting them out to everybody starting tomorrow as soon as they get in. Now let's talk about what's going on in this market on the S&P 500. In fact, all the stocks are up for the day about 1%. That is the S&P 500 and the NASDAQ 100. We see TLT 20-year bonds down 0.6%, gold down 0.21%. Let's look at what's going on the S&P 500. So far, we have a green up candle for the week. We are now 3 days into the 5-day candle, green open box candle with a wick on top about the same width as the candle itself. Price percent oscillator looks like it's a little more than flat. Looks like it's heading up just a little bit. Derivative oscillator continuing to lose downward momentum. So if you look at the derivative oscillator, it's continued to lose downward momentum since it peaked out back on the 2nd of March. So we'll continue to watch things and see what we see. Still a confirmed down move on the weekly chart. Doesn't look like it's likely to change over the course of this week. On the 2-day chart, of course, it crossed over going up back on the 16th of April, went up 2 more days, and then really been sliding sideways and down until the 8th when it started to tick up. The 2-day candle ending the 8th and the first day of this latest candle. Green open box candles with wicks on top. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. We look at the 4-hour chart. What do we see? Well, it crossed over going up back in the afternoon on Friday the 4th, then really went up Monday morning, and then pretty much sliding sideways until the last day, up in the morning on Wednesday, and then Wednesday afternoon. So we'll continue to keep our eye on things, keep you apprised as to what we see happening. Don't have a trade on the S&P 500 because the weekly chart still confirmed down, even though the 2-day chart and the 4-hour chart are up. Remember, our trading method requires long-term trend changes, and then we track and follow that trend. And we haven't had that change. We're still in a confirmed down move. So let's keep moving through these charts. On the Qs, the NASDAQ 100. On the weekly chart, it's still in a confirmed down move since it crossed over going down back on the 23rd of March. Went down 2 more weeks and then sideways since then. This is the first real up week in quite a while on the Qs. Derivative oscillator losing downward momentum. Price percent oscillator heading up. Hasn't crossed over yet. If there's a big up day Thursday and Friday, it could cross over, but not likely. That's a lot of movement on the weekly, but it can sure happen. What do we see on the 2-day chart? Well, it had been laminated from about the 24th of April until the 2nd of May, and then crossed over going up there on Friday the 4th, and we saw it move up in the morning and really in the afternoon. Moved up on the 2-day chart on the 4th, ending Friday, and then the 2-day chart on the 8th, and then the first day of this latest 2-day candle. So again, we see some nice up movement. We'll perhaps redraw the 2-day trend line once this latest candle gets drawn, but again, another good up day for the Qs, up 1.09%. As we delve a little deeper, check out that 4-hour chart. It, of course, bounced off the red signal line there in the morning on Thursday, the 3rd of May, and then really took off going up in the afternoon on the 3rd, went up through the morning, through the afternoon of Monday the 7th, and then sideways there on Tuesday, and then up on Wednesday. So again, we'll keep our eye on things until we have that weekly turnover and going up. We're not going to have a trade in the Qs. Just too dangerous. Again, we're not into speculating. We're into trend following. We're not into forecasting. We're into trend following. Okay, let's check out on the weekly chart TLT 20-year bonds. Remember, it crossed over going up back on the week ending the 29th of March, went up the following week, and then sideways the week ending the 13th of April, down the 2 following weeks, the 20th and the 27th of April, and sideways pretty much over the course of the week ending last week, the 4th of May, and then so far this week down 0.60% for the day. And it looks like we could end the week, and we thought it would happen actually on the 27th, the week ending then, the 27th of April, and the week ending the 4th of March would have a crossover going down. Didn't happen. May happen at this week. We can't call it yet because the candle's not drawn. You never call a candle or a crossover until the time period has drawn, and we're just 3 days into a 2-day candle. Into a weekly candle. Got 2 days left. So we'll continue to watch things. If we do have a weekly vertical crossover on TLT, the 20-year bonds, we will let you know. Let's look at the 2-day chart, see what we see. Of course, it crossed over going down back on the 20th of April, down 2 more 2-day candles, and then sideways. And of course, so far, we've got a down candle forming, and it won't complete until the end of the day on Thursday. And we'll continue to keep our eye on things. Derivative oscillator losing downward momentum. Price percent oscillators ticked over, going down. We'll see how that finishes up when the candle finishes drawing. And of course, we see at the end of the day, we had a crossover going down on that 4-hour chart. And typically when you see both the derivative oscillator and the price percent oscillator crossover at the same time in one direction, usually a good sign that's going to continue on for a few more periods, regardless of the size of the candle, whether it's the 4-hour, the 2-day, or the weekly. So maybe we will end up seeing a crossover going down on that weekly chart. Don't forget, the way we jump into that is we look to go short that following Monday. If indeed we have a crossover on the weekly chart, we'll let you know more if and when that occurs. So be sure to tune in every day. Lastly, we look at gold. Gold down 0.21%. Remember, we had that weekly vertical crossover going down in gold all the way back on the 16th of April. Then gold went up pretty much for about 5 weeks. And again, a little bit of a herky-jerky fashion, but did go up. But starting 3 weeks ago, the week ending the 27th of April, down week, strong down week, and even stronger down week. Last week ending the 4th of May. And so far this week, we have a green up candle. Now, it's not a solid, it's not a hollow box up candle, so that's not as strong as those are, but it's still an up candle, down for the day 0.21%. Price movements below the weekly trend line. Derivative oscillator gaining downward momentum. Price percent oscillator headed down. As we look at the 2-day chart, what do we see there? Well, the derivative oscillator is losing downward momentum. The price percent oscillator still headed down. We look at our price movement on our Heikin Ashi candlesticks, and we see nothing but dojis. Those mean indecision, substantial indecision in what's going on gold, at least on that 2-day chart. We'll see how this latest one wraps up when we get to it. But again, confirmed down moves on the weekly and the 2-day. So what are we waiting for? Well, this 4-hour chart is still in a rollback, crossed over, or what we call a pullback, crossed over going up in the morning on Friday the 5th, and again, hasn't crossed back over going down. We do see the derivative oscillator losing energy, which typically portends a potential crossover. And once we see this price percent oscillator crossover going down, we may very well go short on gold. So if there's a big drop in gold in the morning, it could happen and could open you up to jumping in the afternoon. So pay attention on gold. It's the only thing we really have right now to look that we could possibly trade. Pay attention to possibly going short in a virtual trade on gold. Now, for gold, typically that means buying a put position in GLD in our virtual trading funds. There's just so much of a spread between the cost in an inverse fund in gold that it's hard to really make that work. So buying a put in GLD is usually the best thing to do. Or you can just, again, I do encourage you, go to the website, check out the training that we did on inverse funds, and also the latest training that we did on how to short things. You'll find that very helpful, and it'll help you be able to practice how to do this kind of technique. Folks, that's where we are as we end the day on Wednesday and go into Thursday, the 10th of May. We appreciate you being with us. We love to hear from you. Go ahead and order your books. They'll be getting out the door tomorrow. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.